Hey everybody, it's Jason. It's that time again. It's time for the best ETFs for the month of July. Coming after you after this long holiday weekend. Hope you had a great 4th. We're just going to jump right in today. I got 5 great ETFs for you to look at in this weird stock market tape where everybody's worried about recession and inflation. We're going to see where the big money buyers are placing their bets and see what kind of stocks are under the hood. So let's just get to it. The very first thing I always do is I come and check out what the big money is doing. Big money index is our gauge for when markets go overbought, which is above this red line here, or oversold below. Typically, when you see it goes oversold, we get a big rally. But since stocks have been selling off and the big money index is turning down. Now, why is that? We have seen energy leading the charge all year long. And what we can see here is a chart of big money buying on energy stocks. Take a minute to fall in, but you can see it was buying since January all the way through, strong buying to its peak on June 7th, and then all of a sudden we started to see big selling signals. So energy is under pressure right now. That's what was helping lift that BMI higher. Now it's falling, so we're sort of falling back into no man's land with a lot of volatility. So we're going to expect some volatility for the coming weeks until there's a little bit more clarity over whether or not inflation is mediated or what the Fed's going to do. So what are the big money buyers doing with ETFs? Well, that's a great question. So to figure that out, we head over to the ETF module in the MAPsignals portal. And right away, if I move my face, you're going to see the top ETFs over here ranked. And what we see are some very strong, let me move this over, you see some very strong fundamental scores in here and equally strong technical scores. So stocks within are showing a relative strength relative to this choppy market, as well as some strong fundamentals. So let's just pick, I picked 5 that I like, and we're going to begin with FFTY. Forgive me for clearing my throat there, just getting over something. FFTY, now a lot of these ETFs, I'm going to tell you right off the bat, there's some low liquidity because markets are choppy, nothing's really trending. We're not getting huge liquid ETFs rising to the surface. FFTY is low liquidity, so use your judgment if it's right for you. We've seen a downtrend here, so we haven't seen any big money buying because it's low liquidity and the stocks have been falling off. But what I like about FFTY is that it is the IDB's top 50, and they're typically very strong, especially in trending markets. So if things turn around, I would expect this to rise. And it's got some great stocks in here, like DQ is a stock I know well, HRMY, Vertex Healthcare. So let's just pop in and look at Vertex in our map view module. VRTX. It is a biotech company. Let's move my face again so you can see this. It is an outlier. It's been on our list 23 times, and look at this big money buying, lifting it higher all year, bucking the trend of the overall market. It's appeared on the top 20 many times. If I scroll down here, we can see in our back test, going back to December of 2008, the stock is up 900%. Vertex is in FFTY. You're going to see a theme of healthcare in this. Now, if you look a little further down on this list, you will see IEIH. This is the iShares Evolved Healthcare ETF. Again, warning, low liquidity. This thing trades only like 6,000 shares a day. So expect a lot of volatility if you're going to track this one. But it's got some great stocks in it. It's got shares like Johnson & Johnson, Lilly, AbbVie is a stock I know very well, ABBV. Let's take a look at that one in our map view. Been around 20 years. It's seen a lot of big money buying. Again, healthcare, the theme, big money lifting it all year into May. It's mediated a little bit. It's been on our top 20 recently, and since its first appearance in our backtest, April of 2013, stock's up 430%, 28, something like that. AbbVie, a healthcare stock in IEIH, low liquidity. Keeping things moving along here, our next ETF is liquid. That is XLV. You can see over here, it's got a 99.8 coverage ratio. It's got a strong MAP score overall. Fundamentals 67, the strongest in this list here, and 61 technical. So let's look at what stocks are in XLV. That's the Spider Select Sector Healthcare ETF. We got great stocks like United Healthcare, Johnny John, Pfizer, AbbVie again, Lilly, Merck, TMO. Let's look at TMO. Thermo Fisher is a stock I know very well. It's been on our top 20 lists a lot. It is a large cap beast. Been around a long time. It's nearly an outlier. It's been on our top 20 list 18 times. Excuse me. Again, you can see strong big money buying in through the fall. This thing has fallen off a little bit because it has a little bit more of a technology component in the healthcare space. Has been a top 20 name. Superior fundamentals, sales and earnings growth, awesome. Profit margin of 19.7. This thing has been on our top 20 since 1993 in the back test, up 3,500%. Thermo Fisher. Heading back over to our ETF module. So the theme so far has been healthcare, healthcare, healthcare. But listen, in a recession, we all got to pay for utilities. That's why I like this one on our list. FXU. It's got a strong overall score, 62.4. Fundamentally, it's got a 56.7. So less ideal than some of the others, and a strong technical score of 66.4. But forward sales and earnings for utilities companies should be very strong. FXU is the First Trust Utilities ETF. Okay, and we are seeing, this is a medium liquidity one. The one before I told you XLV trades like 12 million shares a day. FXU trades about 180,000 shares a day. So it's certainly better than our first two top ETFs for July. But FXU has some great stocks in here, like Duke Energy, PCG, Excel. Let's take a look at Duke Energy in our map view module. So the theme tends to continue to be energy and healthcare. Look at the big money buying we've seen. It did collapse a bit, has rallied since. It has taken part in this large, broad-based energy rally, has pretty good sales and earnings, has a solid profit margin ratio. It is not a frequent occurrer on our top 20, but since 1998 in the backtest, it is up 474%. So last on our list of best ETFs in July for this sloppy recession fueled tape is going to be XLP over here. You see it number 15 on our list in the top 20 ETFs, but top 5 for July. We got a strong overall score of nearly 62, 58.5 fundamental, 64.3 on the technicals. Now, what I like about XLP is it's very liquid, 20 million shares, and it also has a dividend yield. By the way, I'm going to go over shortly. I forgot to put all the dividend yields of the other ones. So I'm going to bang them out real quick at the end. But this one has a 2.38% dividend yield, and it's great composure of stocks. Looking within, Costco, I'm sure you know them, Walmart, Coke. Let's take a look at Coke in our map view module here. A Warren Buffett favorite. It's a recessionary stock, and look at all this big money buying flowing in. The company is profitable. It has been It has not been a top 20 stock. Look at that. But we do have great sales and earnings growth here, a solid profit margin. They do have a chunky debt to finance a lot of their operations, but it is a fundamentally very sound stock, seeing a lot of big money buying Coca-Cola in XLP, which is the Spider's Consumer Staples ETF. So there you have it. Really quickly, because I failed to mention it before, FFTY has a dividend yield of 1.36. IEIH yields 1.27. Both of those are very low liquidity names, so expect a lot of volatility if you track them. XLV, high liquidity, 12 million shares a day, yielding 1.42%. FXU, the utilities ETF, trades about 180,000 shares a day, 2.23% yield. And XLP trades 20 million shares a day, 2.38% yield. There are your 5 best ETFs for July. If you like what you see, please subscribe, comment, give us the thumbs up. Please tell us what we're doing right or wrong down below so we can make it better for you. And until next time, don't follow the news, follow the big money. I'll see you next time. Take care. Bye.